What's going on, traders? My name is Slim, also known as the Chef, and I have been trading for the last 5 years, making upwards of thousands of dollars each and every single day, ever since I locked down my strategy and figured out exactly how to attack the markets properly. If you stumbled upon this video, it's probably because you're wondering what are the best indicators to use in 2025, and don't worry, my friend, you are in the right place. Today, we are going to be reviewing the top 5 indicators that you can use starting today in order to help improve your trading. So without further ado, let's cook. So let's start things off with a very essential question. Why use indicators? Indicators help us better understand the market by interpreting price action, identifying the trend, and allowing us to make better, more informed trading decisions. But here's the catch. Not all indicators are created equal. So in 2025, the main topic is keeping it simple. So here are some of my favorite indicators that I use pretty much almost every single day. So starting off with number 1, we have moving averages. Moving averages simply smooth out price data and helps you better identify the overall trend of the market. So here on TradingView, we're going to head to the very top and we're going to click indicators. And we're going to type in moving average exponential. And as you can see, I already have it favorited, but I want you to put a star on the side so that you can have more access to it later on in the future in case you want to make changes. So heading over to the top left corner, we then have our EMA. Now, the very first EMA that I want you to put on is going to be 50. The 50 EMA, I want you to change your length to 50. I'm pretty sure it's going to start off at 9. And then I want you to go up to indicators and add the moving average again. And then except for the second moving average, I want you to change the length to 200. All right. And now you're going to have 2 moving averages here on your screen. So a very simple way to use the moving averages is just to look for crosses. As you can see right here in this area, when we have a cross of these 2 moving averages, you can tell that there's going to be a major change, a major shift in the overall direction of the market. So if I mark this up right here, we can see that the market was in a strong downtrend. Let me change this color just so it's a little bit more visible. We can see that the market was in a very strong downtrend right here, a down channel, making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. All right. And then we had a crossover once price action pushed above that channel. All right. That is our indicator that we are now shifting the overall market into an uptrend. So when the market crosses over, that's when you can begin to start looking for trading opportunities to the upside. Same vice versa, when the 50 EMA crosses below the 200 EMA, you can see that we can start seeing a huge change in structure to the downside. All right, very simple, very easy. Don't overcomplicate this, please. So as we can see, we got the crossover, price came down, and then all in this area, we started to form some support, and we could have simply went in for a long on any of this stop loss below the support range, and we could have made a ridiculous amount of money just simply following the trend. Not only that, one thing I really love about this strategy is that it also tells you how long you can stay in the trend. All right. So as long as the market is continuing to make higher highs and higher lows, as we can see right here, you have absolutely no reason to get out of the trade as long as there's no crossover to the other side, making this a ridiculous strategy to use to continuously scale into a position and add more and more and more. You can add a position here, stop loss below support, take it all the way until there's a crossover. What happens again? We get some support right here, support all in here. You could have took another position, another long position, got in, stop loss below support, and then you take it all the way up. This is a powerful tool, all right? But don't just listen to me. I'm just some guy on the internet. So be sure to go to your charts, put in that chart time, and back test. And that's going to be it for moving averages. So the next indicator that we have on the list at number 2 is going to be the RSI, also known as the Relative Strength Index. This momentum indicator measures the speed and change of price movement, giving you an idea of whether a currency pair or indice is overbought or oversold. So, of course, heading up to indicators, I want you to come up here and I want you to type in RSI. And then the first thing that's going to pop up is the relative strength index. All right. So the next thing we're going to do is go over here to the top left corner of the RSI indicator and hit settings. And what we're going to change are the levels. So clicking on the settings, you're going to come over here to the top middle and hit styles. And then you're going to scroll down. All right. And for your RSI upper band, you're going to want that to make sure that is at 70. And for your RSI lower band, you're going to want to make sure that that is at 30. And then you can adjust the colors however you like. And then you are going to hit OK. So looking at the RSI, we can see that when price is in this area or above 70 or below the 30 range, it's pretty much a pretty good indicator that the market is most likely going to start to show signs of a reversal. So looking at the RSI right here, we can see all in this area that the price was overbought. It was at an overbought level. It was above that 70 mark. And then if we come up here to the actual pair, we can see that there was a lot of consolidation right here. And then there was a strong move to the downside, indicating, showing that this is a pretty good indicator of when we can expect a reversal. Now, moving forward, we can see, and it lines up, just so you know, with TradingView, it lines up. So moving forward, looking at this, where the market was oversold down here below the 30, we can see that in this area right here, it started to show signs. It gave us a double bottom. It started to form support in that overbought range, that overbought area. And then we just simply could have went in for the buy maybe here on a bullish engulfing candle and then took it to either the next level of highs or all the way into the market showed us signs that it wanted to reverse. And that's pretty much how you use the RSI indicator. Go ahead and add that one to your charts and go do your back testing. I hate to interrupt this video and I'm going to get you back to it as quickly as possible, but I had to let you know that for the entire month of January, I am going to be selling my course for $25 only. Yes, I'm talking a full course from beginner all the way to advanced strategies, the same strategies that I use on a day-to-day basis to make thousands and thousands of dollars. These are the strategies that have allowed me to be able to quit my job this year in 2024, purchase an amazing setup, donate to my church endless amounts of money, and honestly help change people's lives for the better. So I want you to click the link down below and use code CHEF25. All right, that is going to be code CHEF25 for a whopping $175 off of your course. You can't beat that. All right, it is a full course, everything you need in order to get into these markets and start cooking like your boy the chef. So go ahead, hit that link down below in the description, use code CHEF25 and get to cooking. Now let's get back into this video. So next on the list at number 3, we have the Fibonacci retracement tool. Honestly, one of my favorites. I whipped this thing out to help me get a better idea of where the market could potentially pull back to before the next move forward, or of where the market can pull back to before we see the next push in whichever direction. So heading to TradingView, I want you to go all the way to the left side of TradingView, go down to the third option and add the Fibonacci retracement tool and go ahead and put a star on it because you're going to be using this thing quite frequently. And here are my settings. I want you to go ahead and take a screenshot and make sure you input these settings at the exact spot that they are in so you can use the Fibonacci exactly how I use it. So coming over to the charts, we're currently in replay mode. So the way you use the Fibonacci in the uptrend, I want you to remember this, in the uptrend, we go from the bottom to the top. And in a downtrend, we go from the top to the bottom. All right. So looking at NAS, we can currently see that the market is making higher highs, higher lows, and that we are in a very, very strong uptrend. All right. Clear as mud. So we want to try to get a better idea of where the market can pull back to after this wave up, this push, whatever you want to call it. So what we're going to do is grab our Fibonacci retracement tool, and from the bottom, the start of this push, and it's going to be subjective because you can do it from the wick, you can do it from the body of this very first bullish candle. However you want to do it is not going to matter that much. It's not going to make that much of a difference. Me personally, I go from the bottom of the wick all the way to the top of the wick before we start to see the pullback. Now, this is important. You don't want to just put the Fibonacci at the very top of any random candle, you want to make sure that the pullback has began. All right, so we have the push up, and then we're starting to see the pull back. That's when we're going to place our Fibonacci retracement tool. Now we have multiple confluences on this chart. As you can see, what we want is for price to come down into our golden ratio area. All right, that's going to be the 50% and the 61.8%. So if I were to mark that off, I could put that like this right here, and then let's make it gold so we know that this is the golden area that we're looking for price to come back down into. And then if price were to come out, just a side note, if price were to come all the way down to the 78.6 range of the Fibonacci, then you can start to expect price to reverse and continue in that direction. But just simply looking at what we have here on the charts, I'm going to press play. All right, price comes back down into this area. Now, what happens? Price comes down to our golden ratio area. It respects it. Not only does it respect the golden ratio area, it also respects our trend line that we have. So what we're going to do is simply go in for a long, because we see the signs that it's being respected. Now stop loss is going to be below that reversal mark, and then for take profit, you're going to have the negative 27, the negative 27%, the negative 61.8%, but you also have the 0%. Now, of course, you can take your trade all the way back up to the most recent highs. Me personally, that's probably something along the lines of what I would do. And this is pretty much giving you a 1 to 2 risk to reward trade. But you can also hold all the way up to the negative 27 extension, giving you pretty much a 3 to 1. And then you can also hold all the way up to the negative 61.8, giving you pretty much a 4 to 1 risk to reward. And this is just to give you realistic take profits, as the market is trending in your favor, so you don't just get out of trade and you can truly capitalize. As long as the market is trending in your direction, you can keep these same levels for your take profits. And then we're just going to press play right here, see what happens. It's going to take a while, of course. We're just going to let it do its thing. I'm probably just going to skip. You guys come here often. Bada bing, bada boom. Bada bing, bada boom. And as you can see, we hit all the way to the negative 61.8 extension. And that is how you are going to use the Fibonacci retracement tool. All right, so for number 4, we are going to be going over the MACD indicator. All right, so what I want you to do is go ahead and head up to the top on indicators and type in MACD, and you're going to add the moving average convergence divergence indicator right there at number 1. So looking at the MACD, you're going to see you have a blue line and you have a orange line, with your blue line being the MACD line. And what you're going to be looking for here is a crossover of the blue line over the orange line, either above or below, giving you a clear signal or better signal on when to buy and when to sell. Something similar to moving averages, but a little bit different. So when a MACD line, the blue line, crosses over the orange line, we can see that that's going to give us a pretty strong indicator of when to buy. And if we can see right here, we see that volume starts to kick in. The MACD indicator crosses over the orange. And then if we look in this exact same area, we had a huge move to the upside. 1 second while I change this nasty color on my screen. All right, but as you can see, looking at the indicator, we had volume kick in, we had the MACD cross over the orange line, and then we had a huge move to the upside off of the support level, just giving you more confluences to cook up in these markets. And then same to the downside, we see right here the MACD line crosses back over the orange line right up here in this exact same area, giving us an indicator that giving us a signal to sell. And then we could have simply went in for a sale here at resistance, and we could have took that thing down all the way back to the next key level, or however you wanted to make that trade. I usually go for 1 to 2 risk to rewards, and we would have got that quick and easy. This indicator is best used to spot reversals and confirming trends. And for the final indicator on my list, we are going to be going over the ATR indicator. So of course, go up to indicators, and I want you to type in ATR, and it's going to be the average true range indicator. All right, now this indicator doesn't necessarily confirm the trend or anything of that nature, but what this indicator does do is help you better set a stop loss for when you get in a trade. I know many of us as traders struggle to figure out where we want to put the stop loss because we want to get those really good moves. And that's where you're going to use this indicator right here. So heading over to the charts, if we're looking at the ATR, what I want you guys to be able to identify is that when the ATR is super high, that shows signs of high volatility in the market, which means that you should be using a larger stop loss. All right. I know we've all been in those trades where we set a pretty, tight or even, moderate stop loss. We get wicked out and then the trade goes on in our favor. Trust me, I understand. So coming over here to the charts, we can see that the ATR is super high in certain areas, whereas in other areas, it is very, very low. So let's just say right here in this support area right here, we can see that the ATR is somewhat high. It's pretty much up there, right? It's of course higher than most times. So that's when, if we were looking to get in a trade, let's just say I were to go back to this point in replay mode. If I'm looking to get into this trade, for instance, let me go back a little bit further. So going into replay mode, if I was interested in getting into a trade here at this support level, we can see that the ATR, it's pretty freaking high. So what I would do is use a bigger stop loss just to ensure that, I don't get wicked out. And yes, we're going to be going for a smaller move overall, risk to reward wise. But if we know that we can safely get into a trade and stay in that trade and still make profits, that is what matters the most. So, and then if I press play, we can see that there was a lot of volatility, and then the volatility kicks down, and then we start to get a little bit more smooth markets. All right. And then the trade wins. All right. Just so you guys know, the trade wins. And and when we are looking to take trades, let's just say right over here in this area off of this resistance, we can see that all throughout this range that the ATR is very, very low, showing signs of moderate to, very low volatility, meaning that if we were to get a simple bullish engulfing candle like this, for instance, or, whenever we tapped into this, we can use a very, very tight stop loss and maximize profits a lot more easily, giving us a larger win when it comes to the trade. And that's how you're going to use the ATR indicator. So just to recap this video, we went over moving averages, RSIs, Fibonacci retracement tools, the MACD, and the ATR indicator. By mastering these indicators, you will be able to add all of these to your tool belts and better conquer the markets and cook it up. Honestly, man, add these to your tool belt. You may like some of them, you may not like some of them, but just knowing them, knowing that they are there in order to help you, will honestly change the game for you. All right, traders, now it's your turn. Drop a comment below and let me know which indicator you use personally and why you use it. Don't forget to hit that like button, subscribe, and turn on the notification bell so that you never miss a video. Let's keep leveling up together. Until next time, stay disciplined, stay focused, and stay profitable. Let's cook.